Is AI hype finally running into hard financial reality? Discover why 95% of companies see zero return from AI despite immense spending, and stay tuned to learn the market turning point Dan Niles predicts for 2026.
And I just want to be on the record saying to our viewers, we've had moments in history that we've lived through where everything seems like it's whatever and then something else happens. I hope it doesn't, but I have to imagine that your clients at Schwab are asking about this.
They are, and I'm often asked about what are those risks out there, be they, gray swans or black swans that could upend what has been a pretty powerful move off the of the April 8th closing low. And especially as we approach earnings season, you always think that it could be something earnings related, either in the aggregate, which appears maybe less likely, or at the individual stock level or a group of stocks. So it's something to be mindful of. I also think, though, that we're already seeing a bit of dispersion happening around the AI theme, even among the Magnificent Seven. Only 4 of the stocks within that 7 are outperforming the S&P. And although Nvidia is still the #1 contributor to S&P gains on a year-to-date basis, that's via the multiplier of its cap size. It's actually ranked number 65 in the S&P just in terms of price performance year to date. And by the way, it's ranked number 635th in the NASDAQ in terms of price performance. So that's another message about this, that individuals should not think they have to have the same kind of concentration problem as exists in the cap-weighted index. There's a lot of performance that can be found elsewhere in the market.
Where else?
Well, some of it is just the AI, the broadening out of the AI story. So you're seeing it in power generation, you're seeing in data centers, you're seeing even in adopters. And that was one of our themes coming into 2025, was you're moving away from just the picks and shovels into a broader sphere representing the adopters. But that said, the where else in terms of pockets of strength in the market, and I'm talking more broadly now than just the S&P 500. I track a lot of these baskets that have been created. Goldman has a ton of them. UBS has the meme stock basket. Speaking of which, it's up over 100% just since the April 8th closing low. You've got heavily shorted stocks doing incredibly well. You've got the non-profitable tech stocks. So in the retail trader world, they've been chasing a lot of these stocks kind of down the quality spectrum, down the size spectrum. What we do tell our clients on that front is that's the kind of stuff you probably want to fade and lean more into higher quality segments of the market.
Yeah, we've shown some names. I know it's one day, but yesterday was energy. We showed some fertilizer stocks that were on the rise. Can the overall market, Liz Ann, go up if there's any wobbling at the top in the Nvidias or the Oracles of the world?
Well, that just by virtue of their cap size, you are going to see it drag down the cap-weighted indexes. But sometimes interesting opportunities present themselves even if the leaders are dragging down index returns. In fact, if you look at the lead in to the mid to late October bottom in 2022, it was a pretty ugly bottom. You had retested the June lows, but under the surface, you were seeing better performance. So the soldiers were kind of catching up while the generals were retreating. And that was actually a sign of better underlying breadth and made that bottom feel a little bit more resilient as a bottom than what had happened in June. We also had, just as recently as this year, memories tend to be short, in the mid-February to early April period of time when the S&P just skirted a bear market, but you did go into bear market territory for the NASDAQ and Russell 2000. It was many of those leadership names that were more of the drags on performance, and you had this better underlying performance. So that's what I would look for. The fuller story is told under the surface of these cap-weighted indexes.